And while manufacturers of consumer goods are increasingly turning to poorer but fast-growing countries to offset stagnant sales in the developed world. Joining us for a look at growth potential in emerging markets like South Africa is Sullivan O'Carroll. He's chairman and MD of Nestle South Africa. Thanks so much, Sullivan, for joining us this afternoon.
Pleasure.
Well, going through a research note this morning, Credit Suisse holding a buy rating on Nestle and citing compelling portfolio with exposure to higher value-added, categories and in emerging markets. What's your strategy when it comes to doing business in emerging markets right now?
I think it's similar to in the Western markets, if you want to call it. We focus very clearly on consumer needs. What do our consumers need? And then we respond to that. So it's no different really, except that in many emerging markets, we've already been in the countries for many, many years. So we know our consumers and we are responding in a way that suits their needs.
Mm-hmm.
Sullivan, Lindsay in Cape Town, I'm just looking at the mission statement from your founder, Henri Nestle, and this was written in 1857. I didn't realise your company was so old. It says a lot about the longevity of it. It says that Nestle wants to positively influence the social environment in which it operates as responsible corporate citizens with due regard for those environmental standards and societal aspirations which improve the quality of life. Quite a forward-thinking statement given the fact that it was written in 1857. Mm-hmm. But when you look at these sort of societal aspirations, there must be a vast difference between the continent of Africa and, for example, Western Europe or the United States. And I just wondered how you manage that within a global company.
Well, I think the way we manage it is that we focus, as I said, on our consumers. We also focus very clearly on the society within which we operate. We don't believe that you can make sustainable business if you do not focus. We have a concept called creating shared value. And one example of that is working with local farmers, our dairy farmers, for example, helping them grow better cattle or produce better milk. We also work, for example, with 4,000 farmers in Côte d'Ivoire, which supply cassava to our factory, which makes Maggi noodles and which make also bouillon cubes. So this is a way that we believe we are working with society, sharing some of the value that we are creating in a sustainable way. And I don't think it has changed over 147 years. It's the way we operate and the way we want to continue to operate in the future.
Okay, from the cost perspective, I mean, you can see why it's become sensible to set up shop in the African continent. I mean, we've gone through two inserts just illustrating the kind of potential that Africa boasts right now, specifically for consumer goods companies operating. From a cost perspective, there's got to be quite a few challenges, though, in setting up shop. What are some of those, and to what extent do they act as deterrents?
We don't think they act as deterrents. We've been here in South Africa, for example, for 97 years. We've been in other parts of Africa for close to 100 years, trading initially with products imported and then manufacturing them locally. If you work with local manufacturers, with local suppliers of raw materials, you can mitigate the costs. So there's no reason why the costs should be any higher in the developing markets compared to the West.
Mm-hmm. Taking a look
Sullivan, sorry, can I just, sorry Alicia, I didn't put my hand up to say I wanted a question, but just having a look at how important Africa is. I mean, when I see Africa, we talk about it every day, Sullivan, on CNBC Africa. We talk about the potential of the continent. And also one of the things that always comes out is that the demographics, the population pyramid, if you like, is so geared towards consumerism in the future. And that must be exciting. I just wondered how high up the list of emerging markets Africa is for you?
It's very high up. It's one of our growth opportunities in the future. We have been growing strongly over the last number of years and we will continue to grow strongly. We have 30 factories in Africa already. As I said, we've been here a long time and we will continue to invest strongly going forward in the future. We spent over 1 billion Swiss francs over the last 2 years in new manufacturing facilities in Africa, 2 of which were in South Africa, one in Mozambique, Beira, one in Kinshasa, another one in Angola. So this is part of our ongoing development in the African continent, and the population dividend, as a lot of people call it, will bring a lot of benefits to Africa, provided, of course, there continues to be improvement in corporate governance, which we see there is continued improvement so far.
As you ramp up operations, you're not the only one. I mean,
Sure.
You've got competitors that are seeing the opportunity just as much as you are. Unilever has traditionally led the sector in emerging markets, from where it derives more than half of its revenues. How are you sussing out competition and the competitive landscape as you venture forth here? Because many saying, that you're possibly behind the curve right now.
Yeah, I don't think we are behind the curve. I've been recently, last week, up in Central West Africa, and there we are by far the strongest food player in the market. Unilever is very strong in the detergent and personal care. So we always look at competitors, because competitors keep us honest. We have very strong competitors in South Africa and in the African continent, so we have to make sure that we are better than them as best we can, and we don't believe that we are behind the curve in any way in terms of comparing to our competitors.
Mm-hmm.
Talking about your competitors, Sullivan, of course, Unilever is the one that springs to mind, and in the press release I'm reading now, it says the following. It says Unilever has traditionally led the sector in emerging markets. Is it a sort of a corporate head-to-head between the two of you?
Yes, I think so. In certain markets that is very much the case. They're a very good company. They've been operating for many, many years as well. They know consumers as well as we do in certain sections. In some countries we are ahead of them, in other countries they may be slightly ahead of us. Some of that is historical. They might have been in a country 50 or 60 years ago before we got there. Or we may have been there before them. So they are very strong competitors. We respect them, but I think in many cases we are ahead of them, certainly if you look at food in Africa.
Let's take a look at your sales targets that you're pricing in for Africa, and what kind of timeline you're looking at to hit those kind of targets moving forward.
Well, we have ongoing targets. We review our targets every year, of course, looking at the environmental competitive set, and we're in line with the targets that we have set, and we continue to see aggressive targets going forward. We have what we call a Nestle model, where we want to see the top line growing as well as improvement in the bottom line, and so far we are able to do that.
I asked the question because going through this press statement, I mean, it says management builds in provisions for unforeseen crises in the region, and that draws attention to the kind of risks that you're very cognizant of. Of course, you've got to factor those type of things into your strategy and your business model venturing into the continent. What kind of risks do you price in on an African continental basis? We
look at each market separately. We don't build in an overall corporate risk. So in our country, in South Africa, for example, or in Kenya, we know we have a specific target for that country, given the competitive set and given the history where we've come from. And then we work to achieve those targets. One of the key targets that we have is internal cost-saving initiatives, so that we can minimize any selling price increases. So we look at the whole ball of wax every year. We dynamically re-look at that on a monthly basis without building into, if you want to call it, a slush fund to take account of risks.
Sullivan, just finally, the first paragraph of your press release says the following: Nestlé is aiming to treble sales in Asia, Oceania and Africa to about 50 billion Swiss francs in constant currencies. Now, one of the themes over the last few days has been the currency markets between myself and Alicia on Power Lunch, and you will know then that one of the risks of doing business in a country like South Africa, and indeed the rest of Africa, is the volatility of the markets. You've seen the rand suddenly go from 8.25 to 8.97 against the US dollar. This must be something that of course a regional office like yours has to take cognizance of.
Yes, of course, and we treat the currency as any other cost input into the market. We have to bear that in mind in all of our discussions, our internal efficiencies and our targets, but we also have to look backwards to see the way forwards. And if you look at a country like South Africa, at one stage we had a rand-dollar exchange rate that went to 13, and then it went back to 6, and now it's back. So we've been here for 96 years, we want to be here for another 96 years, and we have to manage these short-term cost increases in the best way that we can, by looking internally at our cost efficiencies to minimize any selling prices that we may have to put into the market.